Good morning. Wall Street kicked off February with solid gains in stocks as solid US factory data bolstered optimism about corporate America, while losses in gold and silver moderated after Friday's dramatic rout. Bond yields rose alongside the US dollar. The crypto world rebounded, with Bitcoin jumping back above 78,000 US dollars. At the close of trade on Wall Street on Monday, the Dow Jones index rose by 515 points or 1.1%. The S&P 500 index gained 37 points or 0.5%, and the tech-heavy Nasdaq index added 130 points or 0.6%. The small cap Russell 2000 index climbed 1%. The S&P 500 index snapped 3 straight daily losses, shaking off a drop earlier in the session when gold and silver's extended sell-off forced investors to unwind leverage bets. The downturn in precious metals had initially forced investors to liquidate other positions to cover losses, weighing on broader risk appetite. But as metals stabilise, indexes turned positive. Consumer staples led the S&P 500 index higher, up 1.6% after Colgate-Palmolive's blockbuster sales result on Friday, while energy stocks shed 2% as crude oil prices plunged over 4% following a de-escalation in US-Iran tensions. Memory-related stocks such as SanDisk soared 15.4%, while Seagate Technology gained 6.2%. Western Digital rose 7.9%, extending strong momentum from January and late 2025. Technology megacaps powered the Nasdaq index, with Apple jumping 4% and Amazon climbing 1.5%. Microsoft, however, was down 1.6%, extending its steepest weekly drop since March 2020 on Friday after posting disappointing cloud revenue. The sell-off indicates investors' patience is wearing thin, with big tech's staggering capital spending plans, increasing pressure on companies to turn those billions into real, measurable returns to justify high valuations. Alphabet, Amazon and AMD are among the 128 S&P 500 companies due to report this week. Oracle fell 2.8%. The enterprise software company plans to raise up to $50 billion this year as it looks to fund its huge bet on cloud computing to power artificial intelligence. About half of that will be in debt. Nvidia slumped 2.9%. The chip maker's plan to invest up to $100 billion in OpenAI has stalled, the Wall Street Journal reported. Walt Disney sank 7.4%. Even after fiscal first quarter earnings and revenue beat analyst estimates, the company said it still expects adjusted earnings to grow by double digits in the current fiscal year. Shareholders have been focused on Disney's streaming growth as linear TV continues to see declining viewership, and concerns remain around its theme park attendance. Robinhood Markets was the worst performer in the S&P 500, down 9.6%. Piper Sandler analysts suggested the end of the NFL or football season was weighing on shares. Robinhood's prediction markets offering, which allows traders to bet on outcomes of sports games, has become its fastest growing product line by revenue. Albemarle fell 3.3% and looks set to add to a 5.6% decline on Friday as investors seem spooked at the prospect of what might happen to lithium prices amid a commodity sell-off. AI-related data firm Palantir Technologies topped Wall Street's fourth quarter estimates as more businesses and the US government race to buy its AI tools. Its shares are up 8% in after-hours trade. US government bond yields rose on Monday after US manufacturing activity unexpectedly jumped, prompting traders to pair bets on US Federal Reserve interest rate cuts this year. The Institute for Supply Management said its manufacturing PMI rebounded to 52.6 last month. It was the first time in 12 months that the PMI was above 50 and the highest reading since August 2022, indicating growth in manufacturing, which accounts for about 10.1% of the US economy. Following the manufacturing data, traders downgraded the odds of interest rate cuts from the US Federal Reserve, which last week paused reductions. Interest rate swaps show the next cut coming in July. Meanwhile, the House of Representatives took up legislation to lift a partial US government shutdown entered on Saturday, with a final vote expected on Tuesday. The Bureau of Labor Statistics said the closely watched employment report for January would not be released on Friday due to the partial shutdown. The announcement of a large corporate bond offering from Oracle further weighed on treasuries. The US 10-year Treasury yield rose by 4 points to 4.28%, and the US 2-year Treasury yield lifted 5 points to 3.58%. European share markets climbed to a record high on Monday, propelled by strong gains in financial and healthcare stocks as investors look past commodity market turbulence at the start of a week packed with corporate earnings. The Pan-European Stock 600 index finished 1% higher, Banking stocks led the gains with a 2% rise, trading at their highest level since 2008. Meanwhile, the healthcare sector advanced 1.3%, with AstraZeneca up 3.2% after the pharmaceutical giant completed its move to the New York Stock Exchange from the Nasdaq listing. Basic Resources led sectoral declines with a drop of much as 2% before turning positive to close with a 0.8% gain. Shares in Danish jewellery maker Pandora rose 9.2% to the top of the benchmark index, driven higher by a slump in silver prices. On commodity markets, global oil prices settled down around 4% on Monday after US President Donald Trump said Iran was seriously talking with Washington, signalling de-escalation of tensions with the OPEC member, while a stronger US dollar and milder weather forecasts also pressured prices. The Brent crude price slid 4.4% to $66.30 US dollars a barrel, and the US NYMEX crude price shed 4.7% to $62.14 US dollars a barrel. Gold futures settled 1.9% lower at $4,652.60 US dollars an ounce, as higher margin requirements at CME Group compounded last week's sharp sell-off following the nomination of Kevin Warsh as the next US Federal Reserve Chair. CME Group said on Friday it would raise margin requirements on precious metal futures, with the changes taking effect after Monday's market close. Spot gold was trading near $4,670 after tumbling nearly 10% earlier in the session. Copper futures fell 1.6% as speculators pulled back from a market that raced to record highs last week. Iron ore futures slipped 0.7% to $102.66 US dollars a tonne as Chinese inventories rose and steel mills wrapped up restocking ahead of the Lunar New Year. Australian shares are expected to open higher on Tuesday, bolstered by somewhat calmer trading in metal markets ahead of a decision by the Reserve Bank of Australia at 2:30 p.m. Australian Eastern Daylight Time on interest rates. According to latest SPI futures, the ASX 200 index is poised to open the day up by 97 points or 1.1%. Commonwealth Bank economists expect the RBA Monetary Policy Board to raise its benchmark interest rate by 25 basis points to 3.85%, after the December quarter inflation came in hotter than expected, with the Aussie economy close to full employment and full capacity utilisation. In our view, this is likely to be a closely debated decision, and it is unlikely to be unanimous. The main risks are an indication of a one and done scenario or further tightening ahead. Given lofty Aussie dollar levels, any perceived dovishness could trigger heavy selling of the local currency. CBA economists forecast building approvals to be flat in December, following a strong 15.2% lift in November. The prospect of an interest rate hike could cap some of the upside for approvals in 2026. Australia's largest debt buyer and collector, Credit Corp, is expected to release financial year 2026 half-year earnings results today. In the US, the job openings and labour turnover survey of JOLTS figures for December will be released. Job vacancies could edge higher to 7.25 million from 7.15 million in November. Advanced Micro Devices, Chipotle, Merck, PepsiCo, Amgen, Marathon Petroleum, Pfizer and Super Microcomputer all release earnings results. The US dollar strengthened broadly against major pairs on Monday as a sell-off in precious metals triggered a flight to safety, and investors continued to weigh what a US Federal Reserve under Kevin Warsh might look like. The Aussie dollar rose from 69.08 US cents to 69.71 US cents and was last trading near 69.50 US cents at the US close. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day.